Okay, testing. 1, 2, 3, testing, 1, 2, 3. G'day, mate. How are ya? How's your mum? Hello. Good morning, everybody. Grand rising to you. Today is a Thursday, the 8th of June, 2021. Welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders just like you. My name is Wayne McDonald. I'll be your host on this thing we call Forex. I've been doing this thing about 20 years, right? Technical analysis, fundamental analysis, macroeconomics, trader psychology. Just let me know how I can help. Let's go. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So again, once again, welcome to Forex.Today. Ask questions, get involved, write things down, treat each other with dignity and respect, be professional. Click the like button, subscribe, leave comments on recordings. Specifically, I recommend documenting your key takeaways from every single video on the comment section below the recordings. Also like to thank Traders Wave for being part of our community. See, I preach to teach, so I'm here to share and educate, and you can learn from my experiences, good and bad. We can talk very specifically about technical analysis and fundamentals and how to put them together and how to put trade plans together and all that kind of stuff. That's all education, which is great. When you're ready to trade real money, you're going to need a broker that you trust. Traders Way has earned my respect and loyalty. Maybe they can earn yours. So visit tradersway.com, open up a demo account, place some demo trades on your MT4 or MT5. Fast execution speed. Narrow swaps, big spread. By the way, narrow spreads, big swaps. And we can cover that if you want. So thank you, Traders Way, and thank you to you for everything that you do in this community. I know you put a lot of effort in learning how to be a successful trader, and I appreciate that. Okay. Where are we? Okay, dollar still sort of not going anywhere. It's not really strong, not really weak. Yen was weak, then it was strong, then it's giving some back. Do you think this is waiting for the Fed meeting? We had an ECB meeting today. Guess what they said? Yeah, at least another year. But that's not shocking either, is it? Okay. How do we know these things? Well, guess what? You and I have access to the same information that the ECB has. And that's why we do fundamental analysis. Okay. So thank you, ECB. Okay. So let's go through this. Pig is giving some back. Kiwi sort of neutral. Swissy kind of strong. Yen kind of strong-ish. CAD was strong, then it was weak. Now it's strong and it's weak, and everything's neutral. Everything is neutral. Now, maybe you do like pound yen short or something like that, but I think you're trying to squeeze blood from a stone. Okay? Today is going to be the day that I'll throw it back to you. Okay? So anyways, yeah. What do we know? Talk to me, Goose. What do we know? If there were bears, this is the price and time in which bears would sell. So if you're a bull, this is very disconcerting. This is the price in which a bull would buy, and this is a price in which a bull would get knocked out at break even. This is also an entry plausibility, but the thing is, it's not a bullish buy zone, it's a bearish take profit zone. which may be the beginning of something beautiful for a bull. But that's a bit of a guess at this point. You see that? So right now, this is what's happening. And you're waiting, if you're a bull, for this. If you're a bear, this is pretty easy. Okay? Simple price action will do. Okay? And that's that. The thing is, based on typical technical analysis, this sell zone in the first couple of hours of trading this week suggested the best you could hope for is 54, and we got within two shakes of a lamb's tail of that number. So that is kind of supposed to be the bottom of the week as a bear. So you could ignore that and say this is going to trend longer than that, but okay, that's fine. And your argument might be, well, this is predicting something quite low. Yeah, but don't count the bulls out either, because you're in a bullish buy zone, and you should know that. Hey, Sangam, I was thinking, how about like Mr. Sangam? Although I don't know if Frola, right? I don't know if you're male or female, but or indifferent. But I was thinking, Mr. Sangman, bring me a dream. That's what I was thinking. Okay, you see what I mean? So there's definitely shorter term moves here. Longer term is still looking like this. So we don't quite know quite yet. Okay. Sure Yar says, hey, I got out again at break even on Beast. Yeah, that's a good trade. Remember, when you got a free look at on the net, you take the shot. Doesn't mean you're going to score every time, and it doesn't mean you cry every time you don't score, right? Take a shot. Right? The best hitters in baseball don't get a hit 66% of the time. Good hitters in baseball don't get hits 80% of the time. Okay, but anyways. All right. Okay, so anyways, yeah. This is still in play. This is just sort of a time, right? Okay, so again, a bear's thinking this, but I think it's too aggressive just to be doing that, but you certainly have that permission. This is a standard plan A, right? And this is a standard plan B if you're bullish. Hua? So another way of looking at it is you could still, I guess I'll do it in orange. You could still do one of these things, up, down, okay? So it could still be profit-taking zone, up to 55, down to 53.5, and then back to 160. You see what I mean? We're still a bit a ways from the big news event of the season. Okay. You know what I'm talking about? So we still got time. The market's kind of waiting. What a great opportunity to have taken profit after NFP and just walked away, huh? Yeah. These are weekly and monthly pivots, Chad. Okay, Chad? Okay. So it comes down to this, and I think I asked you guys last week, or maybe it was during non-farm payrolls, something like this. Do you think pound yen is going to fall back to 150? Or do you think it's going to rise to 160? Do you guys remember me asking you this? What's your opinion? What's the next big price move? 150 or 160? And if you can't answer that, you shouldn't be trading it. Yeah, LIBOR remembers. Okay, good. So here's the thing. For those that say 160, they get lost in this move and they're like, oh man, I don't know how to trade. All my tools are wrong. My guru is wrong. My mother's wrong. Everybody's wrong. And yet, you might not have any conviction, right? Because look at what you're suggesting by answering that 160. You're suggesting this. Okay? So why get lost on the 15-minute candles? Okay? So if you're a bull and losing a whole bunch of money on the way down, you're not doing it right. Okay? One thing that we might also have in the back of our minds is this kind of thing going on. Hua? And this is what I just suggested earlier when I had the orange, where I'm like, up today, down next week, and then 1, 2, 3 reversal up to 160. Okay? That's plausible too. Put it in your trade plan. Okay? Okay? Okay. Yeah, the other way of doing it, of course, is just change your time frame. I'm trying to show you how people get lost inside the noise and lose sight of what's going on. But yes, if you're trading the daily candles, what happens next is supremely important. Okay. What I'm showing you is you might be able to trade this on smaller time frames. Okay. So imagine you had a plan like this between this week and next week. Okay? Okay? Are you going to lose a lot of money if you either do plan A or plan B, or plan A and plan B? Yeah, Spooky, I'm still on that. Okay? See, very often, you guys are trading inside these candles, you know, like wild and crazy beasts, instead of just saying, well, I have a plan A and a plan B. Okay? Okay. That's that. Okay? That is that. And remind yourselves how much you appreciate pivot points, for example. Like this last month in April, on the first day of April, projected this price. Okay, the first day of April gave you a price that you hit essentially the last day of the month. The first day of the month pretty accurately predicted the last day of the month. Thank you, pivot points. So now you want to give up on monthly pivot points now? Well, this is plan A. This is plan B. Shouldn't that be the basis or foundation to your swing trades and your day trades? Shouldn't that be? You start with that first. See, last month, this would have been your plan A, and down here would have been a plan B. So now this is your plan A, and this is your plan B. That's where you start. Okay? And now you get higher highs and higher lows from plan A, or you get higher highs and higher lows from plan B. Okay? You told me we weren't going down here, so you don't have to worry about that. Because you're like, that's highly improbable. What would make that happen? Okay? Okay, cool. You see? All right, so there's your beast. Let's start on the commodities. Let's take a look. Okay. My oh my, WTI back on the roll reversal. I think we call this a Morningstar reversal pattern. Other people call it Fibonacci retracements. Other people call it roll reversals. Okay, but we should be moving up to the next. Okay, up to the next level. We're most likely going to try to get through 70. We're at 70 now. So next move is what? From here to 75? What's the easiest way to start learning macroeconomics? Well, I'm doing a macroeconomics class this summer for you guys. Do you want to come to summer school and do, I don't know, 16 hours of macroeconomic lectures? That might be the easiest way to do it. Oh, Mr. Sangam. There you go, Mr. Sangam. That's pretty funny. Just noticed. Okay, coolio, right? Abdullah's like, hell yeah. All right, how much money would you pay, Abdullah? What do you think? For, let's say it turns out to be 20 hours. I don't know if that's true. Let's say 15 hours. Let's say it's 15 hours. I believe it's more than that already, but let's just say it's 15 hours. How much would you pay for 15 hours? Learning from a Harvard-educated macroeconomist with 20 years foreign exchange trading experience. How much would you pay? Was that right? What is that, $11.50 an hour? Not even minimum wage. Yeah, okay, good. Right on, thank you. Yeah, minimum wage would be fair. Right, Abdullah? Yeah, now we're talking. How do you spot a roll reversal? That's price action. Super, super, super easy. Roll reversal, what does that mean? Previous resistance becomes support. Previous support becomes resistance. The basis of price action. Okay? Where's that, Dilbeer? Yeah, each one of my classes were many, many thousands of dollars. Yeah. All right, cool. Looking at our XAU. Oh. Aurora. Jen, there's a whole price action course at FX Bootcamp. So if you join, that's going to be one of the courses you go through. I think it's only four lectures, so probably 3 hours. But that's enough to cover the basics. But the thing is, if you don't understand price action, you're not going to understand a lot of different other things. You have to understand the way that the markets move, right? It's critically important. If you don't understand the way the markets move, you couldn't learn things like without price action, you can't do Elliott wave. Without price action, you cannot do Fibonacci. With price action, you will not be able to discern between being bullish on pivots or bearish on pivots. You'd just be like reacting to all these lines. Well, each line has a meaning, and the meaning is filtered via your bias. And you're like, well, I don't know the bias. Well, look at the market. Is it bullish or bearish? You're like, I don't really know, actually. Right? So to me, you need to learn two things, and both are leading indicators. I don't care what indicators you end up using in your trading career, but two things I believe you're going to need to learn: price action and pivot points. Both are leading indicators. Okay? One is a measure of price and the other is a measure of market. Okay? But you will need to know these things, in my humble opinion. Now, do you need to know MACD? Sure. Sure, but no. Do you need to learn RSI? Sure, but no. Do you need Elliott wave? Sure, but no. No, not really. Yeah, you can. It'd be great. But you don't have to. But if you don't understand price action, forget about it. Just forget about it. Right? Forget about it. Because you just will never be able to read a chart. All right. Cool. So anyways, gold. All right, gold. So if you recall, I said in here, was it just yesterday? Maybe it was just yesterday. I said in here, the reason I drew this triangle is I'm a bull, but I was explaining how the odds here are not good. I said at least 50, it's at least 50-50, right? I'm like, I don't like 50-50. Okay? I don't like it. And here's what happened. Okay? So this is a good trade in my opinion. This is not a good trade in my opinion. Now, you might have had a shot because of the weekly early on. Okay, well, then you just recently got knocked out of break-even. That's fine. Hey, there's nothing wrong with a break-even trade if you manage the risk appropriately. Okay? But this isn't shocking because it was as probable to go down as it was probable to go up. And if you're trying to filter with a trend in mind and a bias in mind, that's cool. But you got knocked out, and that's what happens. Now, you might be able to try to jam this one. Yeah, but here's the thing. A lot of people trade this only because it's M2, and they'll say, well, Wayne, in the trading course, you said that you would buy at M2. Well, I said in a trend, right? In an uptrend. So I don't know if this is an uptrend, okay? It kind of looks more like consolidation, right? Or even a reversal, okay? Because lower highs are not a big part of uptrends. In fact, they don't exist in uptrends at all, okay? 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 Because an uptrend, so up is equal to a series of higher highs and higher lows and higher highs and higher lows and higher highs. And we use colors to represent this to make it easier to see. Okay? So when you get lower highs, yeah, dude, seriously, it's not a trend anymore, not an uptrend. So what are the two things? Well, it could range bound for a while. And because you are a believer in the fundamental trends, you figure that that's likely what's going to happen. big move, consolidation, and then eventually by the end of June, early July, we'll be on our way up through 2000 again. Okay, cool. So we're just hesitating around 2000 or 1900, but there's a psych thing going on. But what do we know about technical analysis? This is plan A, and way down here is plan B. So could this still happen? Actually, let me do this in a different color. Could this happen? Yeah. 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 Yep. Thank you, Theta. Okay. Spooky says, what's your advice on getting over early exits? Okay. I'm not sure what do you mean getting over. So you're taking profits early. How do you get over that? Stop taking profits early. Okay. Use a limit order, like a profit order, right? To me, it's all part of planning. For example, if I'm a bear on gold, okay, this is a sell at 1900. The target based on 1900 is 1843. So you enter your trade, you put your stop, and you put your limit. Now you're done. Now you can't get out early. Okay? And later on, like where we are now, maybe you move your stop to break even. Oops. Okay. But if you're prematurely taking profit, stop doing it. If you're making emotional decisions, stop making emotional decisions. Okay? You can only have a mechanical exit. Okay? That's why I use OCOs, for example, and I teach this in day trading. Okay? In the day trading course, we talked about OCOs. Okay? And you have a 99.33 OCO. And I said if you suck and 66% of your day trades are losers, how much money do you lose? None. So now you're focused only on improving 66% losers. To say differently, if 50% of your trades are winners and 50% are losers, you're profitable. Now you just have to do that every day for a year. And you'll say, oh man, half my trades are losers, but at least I made 22,000 pips this year. Okay? It's the basis of consistency. And then what happens when, let's say, 60% are winners and 40% are losers? You're doing quite well and you're quite happy and you're quite consistent. You have low volatility and, you do what you do reasonably well and you have consistent returns with low vol, like I said. So people would probably be interested in investing into something like that. How do you get it to the point where 60% of your trades are winners and only 40% are losers? You're probably trading with the trend. And you're making decisions based on fundamental biases. And you wrap all that together, and what I call that is something sophisticated. It's got a very sophisticated name. It's doing your damn job. Okay? Someone many years ago said 80% of the game is just showing up. No. 80% of the game is showing up and not sucking. Okay? So if you can get to the point where half your trades are losers, you'll be profitable. If you're trading properly, right? Your winners are worth the investment. Okay? So, Wayne, Fed will act against inflation number. Well, what have they told us 15 or 20 times, Theta? Okay. What have they told us 15 or 20 times already? The answers are already out there. Okay. I don't have to speculate. All right. So here we are. I bought Bitcoin at 33. We're at 37.5. Oh my God. Oh my God. Hey, that's pretty cool. Is that a 10% return? Is that a 10% move? That's crazy, huh? That's a good year. Okay. Yeah, I like gold. Sure, gold is the anti-dollar. Sure, that makes sense, right? Yes, Leso is exactly right. The Fed will let inflation overshoot. So many times I've explained what that means. And in fact, during the Fed meeting, when Powell said overshoot, I said, oh my God, did you hear that? Did you hear that? Okay, I think I was doing a special YouTube live stream during the FOMC conference. And a whole bunch of people said, no, I don't know what that means. And so I went on probably a 20 to 30 minute macroeconomic, lecture to explain what it actually meant. Yeah. And I'm like, look, 99% of people that just heard that completely don't understand what it means. Okay? Okay? But luckily, not only did I get a college degree in macroeconomics, but some of my professors worked at the Fed, either in the past or in the current time. They would work at the Fed during the day, come to Harvard at night, and teach. Okay? So I got maybe an inside glimpse on how the Fed thinks, but I heard that one thing, and I'm like, oh my God, did you catch that? Of course, a lot of people don't. They still don't understand what that means. So when CPI is 5%, I'm like, yeah, of course. Have you been out there? Have you been out in the real world and tried to buy something? Yeah, of course. Everything's up 5%. Okay, cool. All right. Maybe that has something to do with employees not going to work for a year. Maybe it has something to do with that. Okay? Maybe you should look at services versus products. So if a deck board is up 200%, okay, is the guy building your deck charging 300% more? Or is it cost the products going up? And the cool thing about capitalism is anyone that feels like they can capitalize on supplying the market with products at super high prices will earn a very high profit because they're supplying the market with something that the market desperately needs or wants. But at some point, they shift the equilibrium, and the supply normalizes and prices fall back to normal. Okay? Why am I reading old editions of textbooks? I don't know. My professor told me to buy it. Okay. Now, many of those books I had bought 3 years ago. So if they're 3 years ago, then that's that, right? I don't know. Also, I don't know why it really matters. Like, you see these books, and all they've done is changed the examples. So now they're like, you should pay $490 for this book because in our examples, we'll mention Facebook and we'll mention Twitter. I'm like, Twitter's dead. What are you talking about? Twitter is so 1997. Okay. So anyways, yeah, they just changed the, the examples. But the principles of economics and finance are well established. And you could read a book from the 1990s and you'd be fine. Right? Tell me someone that got an economics degree or an MBA from Harvard Business School in the 1990s, and tell me how they're stupid now because they read old textbooks, right? It's like yeah. This is right. All right. So, anyways, Biddy is Oscar Mike as well as how about other things? How's your ether doing? Okay, we're just sort of doing the same thing as before, just waiting. Okay. It's encouraging, don't you think? It's happening. Might be happening, right? Oh, wrong one. Yeah, Jim, but but if you were going to work on cars, if you were going to go to a university and become a Ferrari mechanic or something, you should still learn about valves, right? Like I'm teaching my son this weekend how to change the coils on a Porsche. Okay. You're like, yeah, is it necessary? No, but why not? Right? And same thing with again, like a textbook that's 5 years old. Isn't that, ain't that bad. Why is USD bearish after strong CPI? Yeah. Okay. Ahmad, it's a good question, but it's a basic question. The first thing to recognize, and be honest with yourself, right? Be honest. You don't understand basic macroeconomics when it comes towards currencies. Okay? Don't get upset by that. It's not an insult. But you're going to have to learn these things, is what I'm saying. Okay? Why is it? Okay? Then you have to ask yourself what creates the value of the US dollar. Okay? So let's talk behavioral finance for a second. Is that all right, everybody? Just a quick behavioral finance discussion. Okay. Let's say there's two countries here. Okay. Let's say this is the United States. Let's make this a different color. Let's say this is the United States, and let's say this is Mexico. And we find out that prices are going up in the United States. What should an American do when they find out that products made in the United States are expensive and quickly getting more expensive? What does behavioral finance suggest will happen next? I want you to think about it. Okay? If products in your country are expensive and you can't even afford them, what will you consider to do? Another example, I won't stick with the example, but think of it this way. You want to buy a laptop from Japan, but suddenly it's $2,500 for a laptop, right? A Sony Vaio, $2,000. You're like, what the? So what do? You either don't buy it or what? You find a substitute. Okay? So going back to America, you say, well, these products made in the United States are expensive, and even if the products in Mexico haven't changed in price, you might be able to exchange your dollars for peso and get more per dollar than you can in America, which means you export your dollars to to Mexico, and you import the products from Mexico to you because in your terms of dollars, it's cheaper in Mexico. So you increase the supply of dollars globally because you exported it. So now there's more dollars in the world. There's more dollars outside of the United States of America because you traded your dollars for Mexican products. Why? They were cheaper. And why are they cheaper? Because prices in the United States are high and going up even higher. We call that inflation. We measure inflation through CPI. So if the inflation is going up in the United States, you're like, well, I'll just buy it in Mexico and get it cheaper. Or if you want to use the different example, you're like, wow, prices for maybe let's make it more of a company base, okay? Maybe it'll be a better example. Okay, you want to buy a Sony Vaio laptop. I don't even know if they make them anymore. They used to be really, VAIO. They used to be really good laptops, but they probably got so expensive that nobody bought them anymore. Okay, I don't know. Okay? So you're like $2,500 for a freaking laptop. You're like, seriously? What are you talking about? So you wanted to buy the Sony Vaio, but prices have gone up and gone up. And you're like, man, they're really expensive. So you look for substitutes. Okay, so from China, what do you get? What's a substitute? A Chinese substitute for a Sony Vaio. I have a beautiful one right here. I have a beautiful one right here. Beautiful. OLED 4K screen, backlit keyboard, super thin. It's only an i7, Intel i7, but that's enough for Forex traders. Okay? OLED 4K screen. Okay? So I could buy a Lenovo. Or what if I get one from South Korea? Okay? But the issue is, let's just keep it simple. I say, well, I was going to buy a Sony Vaio. They're really nice. But you know what? This ThinkPad from Lenovo, made in China with an Intel i7. So I'm like, well, that's probably the same as a Sony Vaio. It has an i7. So I'm like, well, they're both i7s. But you know what? For $1,800 or $2,000, whatever I paid for it, for $2,000, I can get the Chinese one, but it's got that kick-ass OLED screen with 4K. Holy crap. You should see this screen. It's amazing. And the Sony Vaio doesn't have the OLED. So, you know what? I'm like, you know what? Value-wise or whatever, however you measure it, I'm just going to buy this one. Okay? So we make these decisions. Okay? Because there's a greater inherent value that if the price of a Japanese laptop wasn't so high, I might have just simply bought it out of loyalty or out of habit even. You know, if I've had 4 Sony Vaios, I mean, I had one back in the year 2000, and it was pretty kick-ass, right? So let's say I always bought them, right? You have brand loyalty and all that kind of stuff. But all of a sudden, you're like, the higher price made me think, and so instead what I did is I exported my U.S. dollars to China instead of exporting my U.S. dollars to Japan. Okay? So somebody asked me, again, we have to go back, why does the U.S. dollar weaken when prices go up? Because if prices in the United States have gone up, and in this case CPI is up 5%, then you're like, well, damn, American stuff is expensive. I think I'll buy some foreign stuff. And you export money and you import stuff. Okay? So the supply of stuff has gone down. You understand that? The supply of stuff has gone down. Okay? So when supply falls, prices rise. So if there's a shortage of laptops, or in this case semiconductors, you might have to pay more. Or in this case, the supply of dollars have increased. And when the supply of something increases, the value decreases. So prices went up, the US dollar fell. Now I'm answering somebody's question, and I point this out because that's basic. Okay? And if you don't understand a basic concept like that as a currency trader, holy crap, are you going to have trouble. Okay? So again, it's not like a put down. It's like you need to recognize the importance of the knowledge you don't have, and then, in my humble opinion, do whatever it takes to acquire that knowledge. Okay? You got to know that. You buy and sell money for a living, but you don't know why it goes up or down. That would be a red flag, like, oh my God, right? You got to know it. Basic concept. Prices are going up, so you're going to find cheaper prices somewhere else. Dollar's going to fall. Okay? Okay? Got to know it. It's a must. It's a must-know requirement. Cool. All right, so let's just get off exotics. So let's do our yens. Yen. Okay. What do you think? Is there a plan? And did I tell you far enough in advance? There you go, Ahmad. Yeah, you got to get it. You gotta grab that. You gotta know it. Okay. And so I'm trying to motivate you. I'm not trying to put you down. I'm trying to motivate you. Okay. I'm one of those guys, like, if you just show me what I need to do, or just tell me point me in the right direction of what I need to know, I'll master it. I'll go ape crazy to try to figure it out. When I started, there was no way to know what I needed to know. And it was very frustrating. And from an economic point of view, it was very, very inefficient. I had to try to learn absolutely everything and anything in hopes that maybe 1% of the effort produced some sort of result that was helpful to me. I didn't know what I needed to know, and I didn't know what I didn't need to know, and I didn't know what I knew, and I didn't know what I didn't know. So it was just crazy inefficient, and it took so much effort on my part. There were no books, there was no classes, there were no gurus, there was nothing. Right? There was absolutely nothing. Okay? Cool. So anyways, what do you think? Is this plan still valid? This goes back to my idea that we talked earlier, where if you're losing a lot of money in this process, I want you to also recognize that you are not trading properly. You're doing something other than what's being taught. Okay? And if you can handle the emotional response, some people will just get angry. How dare you, Wayne, say something like that? I work really hard and I put this down and you just, whoa, dude, settle down, relax. Okay? You're so focused tactically that you have very little strategy. What I'm trying to say is go back to what the basic strategies are and then figure out when to tactically be active and tactically silent. Okay? It'll be fine. You will get really good at this. And there'll be times of mediocrity, but you are never allowed to lose a lot of money. Okay? That doesn't make sense to me. So I always ask, what's going on? What do we know? Okay? We do this a lot in the live trading group, right? My swing trading group, which meets today, by the way, 2 p.m. We talk about this a lot. What do we know? What do we don't know? How do we know we're wrong? These are big questions. But if you're going to be a big trader, you got to have to ask big questions, and you have to have the internal fortitude to put yourself in check when it's needed. So it's sort of like, what is the plan for Aussie yen in the month of June? This might be a buying price. This might be a buying price. Okay. You might have bought it here and lost some money. More likely you bought it there and broke even. Then you get down to here. Most likely you bought it somewhere around there and you're Oscar Mike. Okay. And now we're in this process. Okay, now it broke a little late. Well, I don't know when it's going to break. And it's probably going to do something like this, and something like this, and something like that, which is not far off of what I drew a week ago. Gee whiz, I drew this on Friday of last week. Okay? So if during this period you lost money this week, I'm not sure what you're doing. And that's the point where you have to put yourself in check and say, yeah, okay, I see. You're right. You were forcing this. You were pushing it. Okay, you might have had one trade in here. Maybe you got one trade there. So right? And not a lot's happening. So if not a lot's happening, you're not likely getting trade setups. You're like, but I keep buying the daily M2. That's not what the strategy is. Okay? The strategy, for example, in the day trading course and in the swing trading course, the first question is, what is the market doing? Okay? So if you wake up and the market's sideways and then you bump a bunch of M2s and hope you're going to make money today, but the market's not bullish or the market's not trending, then you're not doing it right. You're not even asking a basic question. What are the market conditions right now? I don't know, but I'm going to buy the M2. Why? Oh, because you told me if I buy the M2, I'm going to make a bunch of money. I never once said that. Not even once. Okay? Not even once. Okay? You might be saying, oh, well, simplify to the point where there's no strategy. Okay? So the thing is, if you're a bull here, you're a bull here. If you were a bear here, you were a bear here. And by the way, this is a very bearish sell zone. That's why I have it highlighted. Okay? Which is another way of saying, yeah, there's a high percentage or probability that a bear is going to sell there. This is why when traders wait for the market to move, right, they end up not being successful because someone's going to counter move. Okay? Well, why is it going to counter move? Well, dude, are you not planning? Are you not doing technical analysis? Okay? Like, dude, you don't see that? Okay? So how do you put these together? Well, you're supposed to be a buyer down here and maybe down here if you're late. And then you got to let it make the higher high so you can buy the higher low. Okay? Buying here, well, it's too late. Oh, but CPI in the United States, blah, blah, blah. Dude, we already knew inflation levels yesterday and last month and 4 months ago. Okay? Okay? We know all of this. It's all in trend. It's in play. The central bank knows about it. The central bank talks about it. The central bank tells you what they're thinking about doing about it. The central bank is giving you forward guidance and future projections of where inflation will be and what they're likely to do about it. Like, we know all of this. There's no hype to any of this. There's not even that much excitement behind it. In my humble opinion, this is an incredibly slow open to June. Okay? So how can you lose a ton of money in a slow, cold open? Okay? Right? Okay? Think about it. And, right? So if you think about it and you're honest with yourself, you'll be able to make corrections and adjustments and you'll do fine, right? Okay. Mr. Kennedy says, I still have trouble figuring out the best time to get in and out. Well, getting in is pretty straightforward. Getting out is a very difficult question. For sure, Mr. Kennedy. I don't think that really ever gets easier. You might become more rule-based and more sort of emotionally mature when it comes to the consequence of those decisions. Okay? So you might just end up saying, I will always I will always take profit on R2, monthly R2, with the exception, for example, let me pick a month, with the exception of September. I will get out at R3. Okay? And you'll get sort of habitual with these rules. Always get out of R2, except in September I'll get out of R3. And then from that, if you get out because of those zones and it goes, it continues to go without you, your emotional maturity will say, well, I can't do anything about that. I made the decision. Okay. But that's just really, Mr. Kennedy, that's probably just years of experience at this time, right? So in the first few years, you're just happy to be consistent and profitable. But as years go by, you will get a little better at making decisions. You'll get a little bit better on the seasonality. You'll get a little bit better listening to the Fed and interpreting their meaning. And you'll get a little better on this and a little better on that. And it'll just be, what you do, right? It'll just be a part of who you are and the process of being human, right? But I don't think it ever gets easy. You just get better at making the decisions and better at handling the emotional consequence of doing it right or not doing it right, or getting it perfect or not getting it perfect. After a while, you realize it don't matter none. Okay? Right? After a while, Mr. Kennedy, if you get out at R3 in September and it goes to, the next level up, or you get out, like very often I've done things where I show you guys, I'll get out of all my trades the second week of December. And for 2 weeks, it continues to go up without me. And I'm like, yeah, well, I told you I was going to get out, so I got out. And you'll see how I handle that. And they're like, oh, but if you stayed in all these trades, it could have gone up another 200 pips per trade. I'm like, yeah, well, it could have gone down 200 pips per trade, and then I'd feel like a douchebag. I just feel comfortable now. I got money in the bank, and I had the integrity and the discipline to get out when I told you I was going to get out. So I got out. Whatever happens next is irrelevant because I'm not in, so who gives a damn? Right? And, of course, what happens next? After that 2 week period goes by and we roll into January, boom, the house of cards comes crashing down. I'm like, well, I told you so. That's why I got out. So I'm not trying to be perfect. I'm not trying to make every single pip I possibly can, because every pip has a different risk reward. Every pip has a different cost. I'm trying to get the low hanging fruit. Climbing the tree is dangerous. Fighting the 800-pound gorilla is just stupid. Okay? So I'm not trading against the trend, and I'm not buying above resistance. I'm not buying above 2 standard deviations. I'm just trading the normal, boring, monotonous stuff. If it's exciting, you're doing it wrong. Okay? If you're sweating bullets when you make a trade, you're probably risking too much money. Okay? Forex should be boring, straightforward, like checking into the factory. Okay? And you're the guy that manages the press, the aluminum press. You take a sheet of metal, you put it in the press, so you load it, and then you got to grab some handles up here to ensure your arms aren't going to get crushed. And you press a button and it goes boom, boom. And then the machine opens up and it looks like a car door or a hood, right? It looks like the hood of a Ford F-150. And you put it over there in the pile. And then you go to the other pile of aluminum or steel and you grab that one and you put it in the press. And then you go up here and you go, right? And all of a sudden, there's nothing exciting or interesting about what you're doing. You log in, you're like, is this still bullish? And you're like, yeah, well, it hasn't made a higher high. Okay. So plan A, do something over there. Plan B, do something over there. Okay? So on the first day of the month, you bought it, and you're like, oh, it's working out, and I'm so smart. Uh-oh, 4 days later, knocked out, break even. You're like, huh. Well, that's that. And then it comes down here and you're like, oh, it's consolidating right on my monthly pivot. So somewhere in there you buy it, or the higher, high, higher, low. But I remember there's trades in there. So you buy that and you're like, oh, now it's working. Yeah, that's what I thought. Now, if it breaks to the upside, you'll buy a dip on the roll reversal. And you're like, yep. And it'll go up that way. And you're like, yep. Okay. And it's just walking into the to the factory and you're just a machine operator. Yeah, the Ed Segota whipsaw show. Yeah, I've played that multiple times for the group. Yeah. Forex is a rich man's new poker table. Absolutely not. I 100% disagree with that. Okay? 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 Yeah, let me talk about it. Join, Charles. There you go. All right. Okay? Forex is not a wealthy man's poker table. Do you know why? People don't get wealthy because of gambling. People don't gamble. Wealthy people don't gamble. Why would you gamble? Right? Why would you gamble? Doesn't make any sense. Okay? Just absolutely makes no sense. A wealthy person instead buys an apartment building, right? Collects rent, takes the rent, pays back the bank, and the bank is the largest investor. 15 years goes by. You've refied it once or twice. All the renters have paid for the building, so now you own the building for free. Thank you, renters, aka poor people. And then what? Well, since 15 years has gone by, you decide, you know what? I'm going to sell this apartment building because you have 100% equity now. So you sell it, and the cool thing is it's gone up 75%. So now you own 100% of what the bank and you put together. So you own all of that to have 100% equity. So you paid $1 million for it. Great. The renters paid the bank off. So now you own 100% of it, but it's now 1.75 million. So you sell it. Now you got 1.75 million in cash. Yeah, you have to pay taxes and stuff, but you only put 200,000 into it. Do you understand that? You showed up with 200,000. 15 years later, you sell it for 1.75 million. Why the hell would you show up to Forex and gamble? Rich people don't do that. Wealthy people don't do that. It doesn't make any sense. That's not even in the thought process of a wealthy person. So now they got all this free money and they're like, now I'm going to have a yellow Lambo. They don't have to run a YouTube channel and then go out and lease a Lamborghini so that people think they're successful. No, it's free. What do you mean? Who would spend money on a Lambo? It doesn't make any sense. Most people that buy Ferraris have 2 or 3 Ferraris. Why? They're pretty and they're free, right? Right? They're pretty and they're free because they own assets that produce income. You don't produce the income. So anyways, it doesn't make sense like that this is a wealthy man's poker table. That makes no sense at all. I humbly but completely disagree. Okay? This is simple macroeconomics. Okay? Simple macroeconomics. And you need to compete with the wealthy person's apartment building. Okay? Okay? Yeah, rich just means you make a lot of you know, like doctors are rich. If they don't own the practice, they're rich. Okay? If you receive a paycheck, the only way you can get more money is to gamble it. Okay? Okay? So if you make $200,000 a year and you're trying to get rich, you know, because you're buying $10,000 of this coin and $10,000 of that coin and $10,000 of this other coin. And then I'm like, why are you doing that? You're like, well, I'm hoping one of them pops and I'll become a billionaire. All right. Okay. You have enough money to gamble it, but that doesn't make you wealthy either. Right. Anyways, No, money is guaranteed. Not quite. I mean, it's not guaranteed. Money you can put to work. Okay? Money you can put to work. Finance is the study of cash flow over time. And you can account for the risk, the reward, and the opportunity costs of making every single investment. I can tell you to a fraction of a penny what that apartment is worth, what that apartment is worth, what that apartment is worth. And then we can compare which one should I invest in. One is 2 million, one is 3 million, one is 2.5 million. Which one is likely to have the best return per dollar, by the way? And is that the most important thing? Well, you're like, okay, the internal rate of return on this one is higher, but the absolute return on this one is higher. So do I want the IRR or do I want the absolute? Which return? Well, I'll take the absolute over the IRR. But if I can do it, right, all this kind of stuff. So that's what finance is. And I'm telling you, wealthy people, okay, are investors. They have opportunities. They have people working for them, and they have the right mindset. I don't know wealthy gamblers. I really don't. Okay? I don't know a wealthy gambler. I know wealthy business people. Okay? So you got to look at it that way. You got to be very careful with such language. Be very, very careful. Anyways, I'll move on. Okay. This should be straightforward planning, guys. Very, very straightforward planning. Okay. I look at all these. These are all planned out for you in advance. Look at, I got all the lines drawn for you. All this kind of stuff. We were crying 10 days ago that it's overbought. Now are you crying that it gave you exactly what you wanted? Okay. So far, so good. It's working, right? There's some good trades there. Okay. Look at, got it all planned out. Okay. You see? Okay. Is it perfect? Not quite. But we know Kiwi is one of the weakest right now. The thing is, how do you interpret what's going on now? And how are you going to set up the next trade if you're a bull? There's very clear, okay, staring in our face, absolutely ridiculous opportunities for this pair in the next 24 hours. By 24 hours, probably in the next 4 hours, okay? For tomorrow's trade, not today. But you might take the trade today based on tomorrow's analysis, okay? Very clear. Very, very, very clear there. Okay. This one's still out of position a bit, but there might be a role reversal. It's not ideal. Okay. But remember, it's got oil working for it. Let's take a look at dollar. Okay. Going back into the Kiwi, look at that. Okay. Once again, this negative slope is difficult. But what was your plan at the beginning of the month if you were trading this? Plan A, plan B. Okay, good. Well, one, you were profitable for a couple of days and then got knocked out. Plan B, you've been profitable for a couple of days and maybe it carries up. Okay, well, you'll need a rising tide. Well, let's take a look at a similar one. How about this one? Okay. Not a great example of a trend trade, is it? No. Okay. Let's keep the dollar on the denominator. Okay. This is the example. If you recall yesterday, I was showing how there's definitely bears here. Do you remember that? Yeah, Mr. Kennedy says it's the little guy who doesn't know the rules that looks at this as gambling. But they'll look at anything as gambling. Okay? Think of the logic. You don't know what's going on, but you want to try to get rich. Well, how does that work exactly? It's not even a logical thought process. Well, you can develop expertise and create value over long periods of time, and if so, you'll have a healthy, wealthy, successful life. Yeah, but I don't know what's going on, and I got to get rich now. Okay? Once again, it's not a logic that's logical. It's not a thought process that is logical. It's illogical. It doesn't make any coherent sense. So for someone else, right, and that's what investing is. Okay, if you analyze an investment and you say, well, over the course of 15 years, this asset will probably appreciate. This asset will also provide a level of income. The asset will have expenses that will need to be accounted for. You'll also need an investing partner, so you have to compensate them. So that goes into your cash flows. Okay? And once you account for all of this, so you take in rent, you pay expenses, you pay back your investors, and there might be a little left over for yourself at the end of every month. But over the course of years, through amortization, you're slowly buying out your investing partner. Also, the asset is appreciating because you have an asset that has paid rent for 15 years. It's called cash flow. So you can value the cash flows. And as you're amortizing, your costs are going down, right? Like, why? You don't need to gamble. Now you're like, well, I don't have any money. And so that's why money makes money. Money is important. Okay? But money on the short run very rarely, if ever, produces high returns. If you are looking for any type of investment that's going to pay you high returns quickly, okay, there's undue risk associated with it, but 99 times out of 100, it's bullshit anyways. And only a gambler is going to fall for that lie. Okay? How do you earn? How do you create wealth? Okay? You create value over long periods of time. There's no way around it. You're not going to get rich quick doing commercial real estate. You're not going to get rich quick trading Forex. You're not going to get rich quick in the stock market using options. You're not going to get rich quick at all. It's stupid even to think that way. Okay? But learn one of those things and do it consistently through discipline and patience over long periods of time with low risk and consistent, steady returns. You will be creating value and you will be valuable. Okay? Muhammad says, Wayne, this 2 weeks happened and makes me confused. I know it can be traded on technical and algo trade, but from a macro point, it makes me... Well, look, a macro trade. So how about this? Okay, here we go, Mohammed. Last year, I said I'm going to sell the US dollar for 5 years. Okay? That's not a technical declaration. That's not a fundamental declaration. That is a macro declaration. So, I made that decision 1 year ago. There's 4 years left. So, over the course of 2 weeks, what do? Throw that analysis away? Oops, not 2 years. 2 weeks. Really? And here's the thing. From a bullish point of view, we're still in a bullish market. Okay, that's bearish, right? So let me put it back to bullish mode. I was just showing you yesterday, there's definitely bears still in this market. Okay? But look. So here's your plan A, here's your plan B. Okay? So I bought it here. Okay, first of all, there isn't 97 trades going on here because we don't have good market conditions. Okay, so I caught in plan B. I've done nothing for a couple of days, but I'm not losing a ton of money either. And in fact, I can't lose a lot of money. And based on this basic analysis, this market, based on monthly pivots, for example, is still bullish. Price action is telling me current market condition, current pricing conditions, current sentiment, current price action is not bullish. But has anything macro changed? No. We're waiting for the Fed meeting. Oh, but waiting for 2 weeks, it hasn't gone up. Yeah, well, for 2 weeks, I haven't made a lot of bullish trades. And the ones I did make, I got knocked out of break even. I took the shot, okay? So I'm still hoping to see something like this. But if you recall just yesterday, I was showing you how there's definitely bears right there. So someone asked about, well, how do you get, learning about getting out and stuff? Well, one of the things you could do is recognize that and say maybe on a day trade you take profit. Okay? Cool. That's all. So these are, we're just waiting for the Fed meeting. Okay, that's it. Cool. Dollar strong now. Got to wait our time. Wait our turn. So I think I'll leave it at that. I'll see you at 2 p.m. if you're in my swing trading group. To join, you simply go to fxbootcamp.com. Sign up for the video training courses because you're going to need to learn how to trade. The live trading group is about putting together trade plans, not me teaching you what a 5A cross is. Take the damn course. You'll learn. Great. So the live group is very interactive. So anyways, so when you sign up for the video training courses, it's like, hey, if you'd also like to learn by interacting with other currency traders like you, going through the same process like you, learning the same methods like you, having the personal and emotional challenges that you are likely to go through, then cool. Upgrade your account to the live trading group. $99 a month. That's it. It's not a lot of money. So thank you to Traders Way. Thank you to you. Thank you for all the efforts you put in. Thank you for the good questions. I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. See you at 2 p.m., everybody. Cheerio.